Now, the world's leading investment bank, Goldman Sachs, had made some bullish projections earlier for oil prices, forecasting prices to rise to as high as $200 per barrel. But the investment firm has recently reviewed oil prices downward to $95 per barrel to reflect market fundamentals. Victoria Momo, analyst with financial derivatives company, joins me to discuss this latest development. Good afternoon, Victoria. What does this mean for Nigeria, a country whose domestic need for oil is mostly met by imports?
Good afternoon. Thank you for having me. Like you rightly said, Goldman Sachs has been one of the investment firms that has a bullish outlook for oil prices and even commodity prices in general. And the factors that actually support their bullish outlook is actually undersupply of oil, OPEC, strong reliance on OPEC or strong compliance of OPEC supply cuts, as well as strong demand, expectation of strong demand from China. The current projection of oil prices to about $95 per barrel is actually, way higher than the price at which oil prices is currently trading. I mean, it's actually a good one for Nigeria, considering the fact that our budget benchmark is placed at $75 per barrel. However, we are still faced with high import bill, and this is because of the low oil production here in Nigeria, which has created the need for importation of oil into the country. So as a result of that, it has continued to dent our foreign exchange reserves and, mount pressure on, earnings here in the country. However, a bright spot is actually the Dangote refinery that is expected that has commenced, and it is expected that oil production would increase in the country, and this would, reduce the need for importation into the country, and as well promote earnings for the country in terms of export of the commodity.
Now, the projections by the investment firm are not only restricted to oil prices, but we also see other commodities like LNG and grains. What is the outlook for commodity prices? Is it the best bet for investors at the moment?
Well, actually, Goldman Sachs did not just have a bullish outlook for oil prices. There are also other commodities that the outlook are bullish, and one is LNG. And they expect that the current low prices of LNG would increase, this year. And this is as a result of a restocking, by investors, and as well as, increased demand for LNG from China in order for their industrial activities. Also, we have commodities. We also have commodities like, the grain prices, which of course are trading low now because of the extension of the Black Sea grain deal. There are commodities also like sugar, yes, that has been trading higher for a while now, and then is expected to continue rising as a result of tight supply in the market. And this is expected to continue. Most of these commodities are commodities that Nigeria imports into the country. And of course, the increase in importation of these commodities, as well as due to the while prices remain elevated, actually increase the country's import bill and also weigh on the country's foreign exchange reserves. But on the bright side, there are commodities like cocoa, which Nigeria exports. So the increase and prices for cocoa are projected to increase as major suppliers, that's Ivory Coast, actually recorded low rainfall. So increase in price of cocoa would actually boost the export earnings for Nigeria and support growth.
We see the Nigerian government, you're talking about exports here, has resorted to an import substitution policy, which is geared primarily towards curtailing dependency on foreign products. And you've used a host of, policy tools like tariffs, bans, and quotas. But what we want to know, what opportunity does this present to the country, given the outlook for the commodity prices?
Well, the general outlook for commodity prices is that it would, tilt towards the high side, and it is true that Nigeria government has actually, placed import restrictions on certain commodities, and we've seen domestic industries actually taking advantage of this, by investing in most of all these commodities in order to increase, the domestic supply of the commodity. We've seen increase in investment in rice, increase in investment in sesame seeds, and all of that. And that all of that has actually, supported earnings for domestic industry. However, the rising or the prospect of increased price of global commodity actually presents opportunity for domestic investors to take advantage of that rising price to increase domestic production, and as well as produce more for exports in order to, like I said, take advantage of the high prices at the global market. And the government can actually come in here by, subsidizing the domestic prices of these commodities in order to boost the domestic demand for it. I mean, when prices are relatively cheaper compared to the ones that are being imported, I mean, people would substitute the domestic commodities for that of the international one. So the government can also, make the business operating environment, very, very favorable for the businesses in order to, make them competitive in the international space. So, I mean, that would, help the economy in general.
Thanks so much, Victoria. And I do hope you're taking positions in the non-oil commodities space. I don't know which one you've taken. Is it grain? Let me know. Thanks so much,
Actually.
Victoria Momo, analyst with Financial Derivatives Company, for sharing those insights.